The tariff drama is done. The next big event in the economic calendar is the Reserve Bank's Monetary Policy Committee meeting on April 9th. Trump's tariffs seriously threaten growth, so should the RBI MPC be ultra-dovish? As always, the Citizens Monetary Policy Committee of CNBC-TV18 meets to discuss the issues that lie before the RBI MPC and what they ought to do on April 9th. I have with me Chairman of our committee, Dr. Pronab Sen, and members Soumya Kanti Ghosh of SBI, Sajjid Chinoy, JPMorgan, Samiran Chakraborty of Citi, and Sonal Varma of Nomura. Gentlemen and Sonal, thank you very much indeed for your time. The first question has to be the global setup. So, Sajjid, let me start that with you. How does the global economy look post this massive tariff imposition? Are you seriously cutting global GDP estimates?
Lata, we're doing more than that, because I think you have to, what we've seen this week is a seismic event. And I think this needs to be viewed at three different levels. The first level is to understand that Asia has been particularly badly hit. This is no surprise. I think the tariff approach was a very mercantilist approach. If you look at where the US runs the 15 largest bilateral trade deficits, 10 of those 15 countries are in Asia. And therefore Asia, whether it was China, Vietnam, Japan, India, other countries were hit with very large tariffs. So this is going to hurt Asia directly, because now an export-led model that many Asian economies have with a lot of exposure to the US will come under threat. You've got large exports to GDP to the US and a large increase in tariffs. That's the first level. But there's a more important level here that affects the global economy. What this tariff increase does over the last few months is effectively increase US import tariffs by 20 percentage points. US tariffs are now the highest in over 100 years if these tariffs sustain. And this constitutes the largest tax increase on US households since 1968, when the US Revenue Act came into being, right? So the sense is that a very large tax increase is inevitably going to throw the US economy and with it, the global economy into recession later this year. And I think that's the big change from this week, that we now have greater concerns that the US and global economy will spill over into recession later this year. So economies now have to worry about both hits. A, your tariffs go up and that hurts your exports, but B, global demand is going to be much, much weaker later here because you're in a global recession. And number three, and we don't have time for that today, there's a much larger structural question. Is this the beginning of the end of the, 80 years of deglobalization that we've seen since the Second World War? And what does that mean for growth, for inflation, for productivity around the world? But those are more weighty questions that will unfold, in the months to come.
Yeah, no, that's a debate for another day. But for the moment, the MPC is going to be faced with an extremely difficult global environment. Samiran, we were already worrying about our own growth. This is an added headwind. Do you think there is space for extra dovishness or even requirement for extra dovishness because of the global story?
Thanks, Lata. I think the way MPC will probably look at it is that from a risk minimization perspective, now the downside risks to growth are much higher than the upside risks to inflation. That clearly opens up space for more easing. Our baseline is that we should see a 25 basis point of rate cut in this policy, along with a change in stance. The RBI has already provided significant amount of liquidity to the system for better transmission of this rate cut. And that assurance would also come in the April policy. Additionally, we have added an rate cut in the August policy also in response to these downside risks to growth. So that way we now have another 75 basis point of more rate cut in this cycle. But we have also very clearly mentioned that we are entering a period where it is possible to imagine that the policy rates could stay below the neutral rate also, because this 75 basis point rate cuts will only take us close to a neutral rate of about 5.5%. So given our estimate that inflation is running close to 4%, but there is a possibility that we might want to go below neutral also. But like it's a very the world is in a state of flux. So I don't think policymakers will be very proactive always in this. Maybe to some extent they will wait for how these things unfold before taking that final call on whether to go below the neutral also or not.
Okay. When we ask for your votes, let me see how many of them agree with you in terms of 3 more cuts or 4 more cuts. But let me first get the GDP numbers. That's also a forecast we will look for. Sonal, that question to you: will India's GDP growth number come under pressure? The Reserve Bank's current forecast, or February forecast for FY26, was 6.7. Will they have to lower it?
Yes, we do think there's downside risk to the RBI's projection of 6.7%. Now, the direct impact on India because of US exposure is actually not that high. India's exports to US are about 2.1% of India's GDP. So the impact is manageable. But I think the indirect and sort of the second round effects are what could be more material because it's broadly a universal tariff that has been imposed, so global trade numbers are likely to get downgraded. Uncertainty is weighing on business investments, and tighter financial conditions will also feed back into weakness in private investments going forward. So we do think that the growth numbers starting April, which will reflect the real underlying export growth as compared to the last 3 to 4 months, where there was front loading ahead of anticipated tariffs, are likely to be materially weaker. Our own growth projections for India are at 6% for FY26, and we do think the 6.7 of the RBI is on the higher side.
Okay, 6%. I think that's not a number I heard from many people. I heard 6.1 to 6.3. But then the MPC has to concentrate on inflation. Soumya, that to you. Will India's inflation pan out as 4.2%, or can it be even lower?
Yeah, thank you, Lata. No, I think amidst this global turmoil, uncertainty, and a complete flux with the system has been thrown in since yesterday, I believe the good news is on the inflation front. The numbers for inflation are actually looking significantly better now. And if the current estimates holds, I think for most of the months in the current fiscal, I think till October or so, the numbers will stay closer to 4% or even lower than 4% on many of the occasions. So that means actually that the RBI target of 4.2%, in fact, for the last fiscal which has went by, the RBI projections will also be was higher, and this time also the RBI target of 4.2% inflation is likely to be undershot. So from that point of view, inflation as of now doesn't look a big issue. And there are 2 more factors which actually are downside risks to growth, which could also act to a comforting factor on inflation. One is the point that because of the global uncertainty on tariffs, there could be a price decline in some of the sectors which are more integrally linked. So that could also have a sobering impact on the inflation. And given the numbers and given the fact that the growth continues to be a little bit weak, so that will also give a comforting factor in terms of a manageable core inflation. So if I take all these factors into account, the inflation numbers are going to surprise on the downside, at least for now, for next several months in this fiscal.
Okay, point taken. Huge disinflation. You can't sell to the US, so you sell it more cheaply to the rest of the world. That big disinflation we will have to countenance. But Dr. Sen, let me turn the question on its head. Samiran is going to the extent of, even we have to go below the neutral rate. What about savings, sir? We are at, kind of a 5-year or what? Some people say even 40-year low in terms of household savings. Can we go no holds barred on cutting and dovishness?
Yes, in a sense, we can, and we will probably need to do that. So here I agree with Samiran. We may actually need to go below. But this is not the time to do it. I mean, one has to think this through a little bit. You will have to see what strategies different countries around the world are going to adopt, because there's going to be a wholesale change among almost all countries of the world in terms of the way they are going to plan their reaction to what has transpired. So yes, I think we should be prepared for lowering everything. Inflation, I completely agree with that. Inflation is likely to come down sharply, and this is not just about what's happening globally. It's also that if you really look around the world, the only country that really stands out as being able to grow on its own steam is India.
Yeah.
And so, when somebody talked about, I think, mentioned that the growth would be probably sub 6%, I think that's not a bad number, by the way, because other countries are looking at facing recessions. Yeah. And I think we would be around the 6% mark purely on the basis of our own strengths. The point is, we shouldn't rush into anything until we see how things are evolving in the rest of the world.
All right. Fair point, sir.
Taking premature steps is, I think, a bad idea.
Okay, rushing into anything is a bad idea. So I'm smelling that we are not going to get a 5 out of 5 in terms of repo rate cut. But those questions after the break. I will have to take a break. We have to analyze the inflation situation a little more because that's the MPC's mandate. And then, of course, we will ask for the committee's votes. All that coming after the break. Bazaar viewers, you will get to see the entire show after market hours.